So right from the top, guys, let's talk about our own backyard, our own local area. This is coming from HOUSINGWIRE, where not only does California make news kind of regularly, but in this article specifically, San Diego. So article title, A San Diego Data Dive Shows a Market Upended by Tight Supply. California is home to 39 million people, and only 55.3% of the occupied homes are owner-occupied.
We've been talking about that, you know?
At least they're being honest. Landing a California home is hard and expensive.
Yeah. You know, here's the thing, guys. I mean, it's like, here we go. Like, it's like a catch-22, right? Like, it's great that our property values are good, but at the same time, it's just...
So let's I want to go. Let's set a little bit of this stage. Okay, so in the very top of the article, yes, I'm mentioning 55.3% of occupied homes in California were owner occupied, the third lowest percentage. That's behind New York at 53.9% and Washington D.C. So while they are not, while D.C. is not a state, it's still being counted as one, at least for this metric.
It's pretty close.
At 42.3%, that's an extremely low amount. But also the primary industry or business in D.C. is politics. So politics and also all the associated things that are connected to politics. So I'm not sure that I'm surprised by that one. I'd almost
who wants to
consider
own
that
a home
as
there?
Well, I mean, I guess part of why I'm mentioning this is it brings up the concept of permanency. And I think that these statistics reveal that on one level you could say, oh, well, it's always an affordability issue. But on the other, I think when it comes to D.C., and I don't know this, if you're in D.C. watching this, tell me, you have to have a commitment to permanency there. I can see why people would commit to being a permanent resident of New York because they're there for, their family. And New York, by the way, is not just it's a huge place. There's farms in New York. Did you know that? Yeah. There's farms in New York. There's farms in California. And so you have the coast and all these other things the reasons that draw people to New York and California, even Florida, Texas, big places like that too. But I think the permanency is the thing for me. Is people are committing that they want to be here, and in DC it doesn't sound like that's the case. Very few people.
No, it's crazy.
But talk to me about San Diego. Let's do.
I mean, here we are. One of the things, not just San Diego, but in California, I didn't know 39 million. I was like, that's quite a bit. Mm-hmm. We're considered one of the largest states now in population.
It is
crazy.
It is the most populous state by volume. Yes,
that's pretty crazy. But talking about San Diego, guys, it is a crazy market right now that we're currently experiencing. Multiple counter offers are back. People offering higher than what the listed price is. Mm-hmm. So I had a great example that I'm pretty sure I already shared. But one of my clients was looking to purchase a home in the San Miguel Ranch area, and it was listed for $899,000. We contacted the listing agent. Hey, would it be a contender if we put an offer in at $930 with no appraisal contingency, since we're putting 30% down, excellent credit score for the buyer. First thing the listing agent said, oh no, you're really far off. I'm like, really far off, like maybe $20,000-$30,000 more. She goes, no, you got to go higher. You're already in the million. We're like, what? There's no way. Sales comparables in the area of what I saw were like 950, 970 more or less, for a really fixed up property. This one needed some repairs. Wow. Well, fast forward a month now, that property closed for $1,050,000.
What?
Yes. For $1,050,000 FHA financing. They went in there with that.
Wait. Don't let that pass people by. Say it again. $1,050,000. And what kind of financing?
$1,050,000 with FHA financing. And when we talked to the listing agent, she said there was no appraisal contingency either. For some of us that are first-time home buyers, in order to compete in San Diego, we're putting a no appraisal contingency, which means if the value is less than what I offered, I'm committed to that price either way.
So if you were to guess, why did they do FHA? What would you guess?
Money down and the lower interest rate.
So some of the reasons, and this is for the audience, so the part of it is lower interest rate, number one, which also then makes the DTI better, the debt to income ratio. Correct. Or maybe they need the higher threshold with FHA that's not afforded in conventional. Also, maybe their credit score is possible too, and lower down payment. So I want to squash the idea that FHA is for first-time home buyers only. Yeah. It is not. This is a $1 million home that someone's waiving the appraisal contingency for, which means they have enough money to cross the Rubicon, if you will, if it comes short on the value. But also maybe they needed it because of the lower pricing or on the interest rate, higher DTI, or their credit.
Who knows?
Yeah.
All I know is they closed, which is crazy.
Insane.
Yes.
So to add on to Will's point, so since 2019, 2020, I feel the San Diego market has been riding a high, and we've only seen slowdown in certain pockets of the area. But the article goes on to say how broadly San Diego followed the same pandemic era trajectory as the rest of California. But what stood out to me is that as sales boom between 2020, 2021 / listings, and we're still seeing that same effect. Now, also this brought up a huge role for at home living as well. I mean, at home working as well. So that also played a big role in people having to stay home, because now you're staying at home. You need bigger spaces, so therefore you're going to want to have a house that's bigger. So you're not just buying for what you need, but for what you want, but now also what you need. So hey, home office, bigger space. Yeah, we're gonna have the whole family at home. So that also played a part in everybody saying, hey, well, I'd rather pay more because I look at myself staying here for longer than not. So I'm willing to fork out that extra $1,000, $2,000, whatever, because of the fact that if you buy in San Diego, if you're able to and you can afford it, the long-term play is very, very positive and lucrative.
And I see it on both ends of that, because you see people that kind of pot committed to buy a house for maybe more than they would be comfortable with, but they could afford it when rates were low. So they're like, oh, I can walk myself into this house that's maybe priced higher than I would have looked at or considered a couple months ago. And at the same time, because the rate's low and I can afford it, I'm probably going to stay here longer. And last week we're talking about that other report, and that data was showing that people have increased the duration of their stay. The median stay homeownership is now 11.9 years.
Yeah, that's crazy.
So and that's nationwide, and that's nationwide. So I think you have some of those forces at work. And what was crazy to me is again, in with that is that the number of listings in San Diego fell more than double than the national average than the rest of the country, which is insane. So we talk about propped up prices. We talked about home values not going. You're talking about people getting outbid even on an FHA deal. By the way, let's dispel the other myth. Just because you're qualifying with FHA doesn't mean that someone with conventional is going to get accepted over you or they get their offer.
Well, obviously.
Right? Obviously. But I think
because we're going 30% down conventional financing, excellent credit scores.
Yes.
Versus FHA, not to downplay anything, but we would never think we'd lose out to that. But they
that's
offered,
the misconception.
Exactly.
Like that's the stereotypes. Oh, if they need FHA, they're not as strong a borrower. Not the case.
Just like I was actually putting it right now. Exactly.
And that goes to show that their loan program doesn't really matter if the terms and what the seller's looking for makes sense for them.
That's correct.
Who cares what you're closing? As long as you could close, that's all that really matters right now, because we've also seen that people open, but they can't close. And now the house goes back on the market.
And it's true. Just like you mentioned, Andy, when I saw the price at $1,050,000 and I see the money down, obviously it's not going to tell me the type of, but you can do the math, reverse math, and I figured out, I'm like, we lost to FHA. What the heck is going on? Wow. But I see it's $1,050,000. They took that chance of waiving that appraisal contingency because
roll the dice.
They're like, what do we have to lose?
Wow.
We already want this property, and so they managed to get in there, with minimal money down.
So one of the good things that we keep saying they waived the appraisal. The good thing is that you still have your loan contingency in place. Correct. So regardless, you can still wiggle your way out, or you still have an out, and you don't have to basically put your EMD at risk. So that's also a very strategic move that a lot of people are taking so that they're able to get their offers accepted.
Yeah, getting to San Diego is just becoming how do we get creative?
There it is. You said it. How do you get
creative?
creative?
And then relationships matter.
100%.
So
wow.
I think that's actually a huge part that every real estate agent is going to go ahead and say, or every industry member is going to say, oh, it's about who you work with matters. And over the years you start to find out that it really does, especially in competitive markets like San Diego. When you go across someone that you've done work with, that they know how you work, that they know how your team works, how you guys perform, when they see your name and they'll see it over and over again, they're going to be like, hey, I don't even have to think twice. I will take their offer because I know that they can perform. Where it's like, hey, this other offer is good, but I don't know them. I don't know if they're going to close. My seller's in a hurry. I'm going to go with who I trust and what I can, who can get the job done.
I think this also makes the case for being a backup offer. Like if you're looking to buy a house right now, or maybe you're in the process of looking for homes, you haven't found the right one, or maybe you've been making offers. Like, yes, okay, it's fine. Someone in this case got that deal. Yeah. But again, let's say that deal, let's pretend that deal had fallen off. What'd they do? They'd go to number 2. They'd go to number 3. They'd find who else is still in line, who wants this house. And so I guess the point is, like, don't give up. Like
Don't give
stick
up.
to it. If you're already qualified and you're looking to buy a house in 2024, like just stay the course, because if that deal had fallen out, and Will's saying right now, well, if maybe we could have been in second position. I know we weren't necessarily in this case, but let's just say that could have happened.
Way off.
Then someone would have been, because we're not the only ones.
And I mean, you guys see the
fight.
data. Where listings were half than what the nation has.
Yeah.
So we're like so limited of supply. That's why it's a very lucrative place to purchase right now, a home in.
And here's the other thing that I knew. I know that we know this because VA is our specialization, and we have done predominantly VA for the majority of our business's lifespan now. And it mentions it here. San Diego retains its distinctive preference for VA loans as compared to the rest of California and the rest of the United States.
That's right.
VA was the second most popular purchase mortgage loan throughout the period in San Diego. This is the period from 2019 to 23, while FHA was the second most popular. So
in the other parts of the nation, right?
Yes. Yes, so
which is
VA
pretty
for
crazy.
here,
Yeah, here.
You've talked about this before. We're landlocked on the south with Mexico. We're landlocked to the west because of the water, and we're landlocked to the north because of Camp Pendleton. And then we're landlocked to the east to a certain degree because of the mountains and preserve and that kind of thing. So you're talking about like a corner of a dot in the map on the United States where it is highly contentious. There's a lot of competition, and VA is still in the game all the time.
It's very warning to see this, because I know when I got in the industry, VA was just kind of like, you got a VA loan? No, you're not.
No
we're not
one
going to even go
wanted
with
it.
your.
Like an FHA.
Oh, it's strict. It's this, that, And so people would deter veterans from buying homes. I'm glad that the rules and everything has changed as we went forward, because we have some of the biggest bases there is, military bases. So how do we serve that community? I'm just glad to see this information, because it just it helps us understand that we are helping that community now achieve that dream of home ownership.
Do you remember in 2005 and 6 and 7
Oh
asking about VA?
yes,
Everyone was like,
I
we don't even do VA.
is that?
You're
No.
like, these are like the biggest banks lending money in like the craziest time, and they're like, oh, we don't do VA.
But Andy,
like, what?
remember it was like $350,000 the medium sales price, and that's the max it can purchase at 100% financing.
Right.
So the medium sales price at that point in time was like $620,000.
Yeah.
So I was like, what veteran has the difference to come up with that money down?
It didn't make sense because
It did
there
not.
was other market options which turned out to be pretty sour, like 100% no fine, 80,
80-20
80-20
piggyback.
that stuff, no credit, fog a mirror and get a loan. So I understand it was not popular, but again, it was the VA had to change some things along the way too, and then banks had to kind of warm up to go, wait a minute, this goes back to our whole argument about creativity in tight markets is the banks in the industry will figure it out because they need to make money. They want to make money. They need to make loans in order to make interest, to make money for the people that are dumping money and parking it with them, hoping for a return.
And I'm glad that you're mentioning that, because Fannie and Freddie, they've been doing a tremendous job to try to get people enticed, new first-time home buyers, et cetera. We had more, and this article doesn't say that, but there was an article that more new home buyers came in 2023 versus 2022 when the rates were in the 4s.
Right.
Versus now the 6 is 2% higher, but yet we had more first-time home buyers coming into the market in 2023.
Yeah.
And that's just because, again, Fannie and Freddie came up with 5% down that you can buy now a multi-unit property. When before that wasn't the case.
Yeah.
So I'm glad that they're there and they're helping the community, help them achieve that dream of home ownership as well.
Yep. I think part of this is a reflection of just our mix of who's here in San Diego because of the military, and even a really pretty I'll say healthy veteran population that's not active anymore. There's still a lot of that going on, and conforming is different in San Diego. It looks like. I mean, the data suggests that, and I am not really surprised that VA is overwhelmingly used a lot here.
Yeah. I also liked that article talked about the real estate companies of how much listings they're actually getting. It was pretty cool to see that information. And you just get to see like the companies that pivot with the changing times are just going to be that much more successful than the ones that are just kind of,
That's what I was going to say. Companies that were poised with the right infrastructure were able to, take on the new business or take on the business that, others weren't able to innovate into or be able to take it as, the times were changing. So I thought that was, pretty interesting.
I know. I like that. EXP came in like one of the top ones, and then Pacific Sotheby's, when they were before in first place, they actually just fell to like 10th place.
Right.
Like, it's just crazy.
I think a lot of it has to do with like how the structure of their business, how many people they keep, what kind of recruiting you have. what the stickiness of those people to their career in real estate is. Obviously, their client database is going to prove or not prove worthy in the end of creating deals or not. So there's a lot of those things on the table too. But I mean, EXP I think came in number 3 on that list of the amount of scale of growth during that time.
They were they went from 11th in 2019 to 3rd in 2023.
And EXP, for those of you who don't know, is virtual. Right?
Yeah.
I shouldn't say virtual, but like
absolutely.
They're not as brick and mortar as like your Coldwell Bankers and Keller Williams and all that. So we're kind of more primed for that moment. And then you can see as a result, they jumped that list all the way to number 3.
Correct. Like the best way to compare that, best way to compare it is like your Blockbuster and Netflix, right? Yeah. When they went in there. People, I got to go and see the video. When Netflix was like, wait a minute, you don't. You could have it from your phone, etc. So this is the way they're doing. Everybody is more brick and mortar, and now EXP is going to a different way where it's going to be more virtual.
Yeah. So like you were saying on that, I think before people were more keen on going towards the big companies, the big names, the ones that were there, the good big corporate companies. But now these virtual companies allow for people to connect with people that they trust, that they relate to, and that ultimately have similarities. And I feel that's the way where a lot of sales businesses like that are relatively like ours, where it's not about the company, but it's about who you are within the company and the brand that you give out to people, because your company's your company, but they're doing business with you. So if you're able to overcome everything else, who matters what company you're with? They like
it used to be like the 3 L's for real estate is location. Now it's relationship, right?
And also, I think also maybe overlooked or maybe even unseen is the fact that during that same time there are a lot of people that left their traditional brokerage for EXP. So I think that has a lot to do with style and future pacing of where are we going as an industry, how much more are buyers looking online, and I mean just that whole virtual experience, if you will. It's migrating a lot of people towards that. So I think that helped push.
Brian brought up the people are buying more of the homes because they're using home office.
Right.
And so instead of going to an office and paying a desk fee like the traditional way of doing things,
I'll eat my desk fee.
Yeah, why pay that desk fee when I could just pay at home?
That's a really good point. You eat the desk fee and I'll pay more on my house, but hey, your house is gonna pay you out in the end. Your office ain't.
I have a tax deducted.
And exactly.
Yeah. So, wait a minute, we're at our office.
Yeah.
Wait a minute.
All right,
that's
guys.
for different purposes. That's different.
I enjoy seeing you guys. So
all right, well,
that ain't gonna happen here.
We're social creatures. That's different. So I need to speak to people. I don't just need to be in front of a screen.
Nothing virtual yet.
Next topic. How do we turn this office to a money maker for everybody? Okay.
Can we make this a primary?